Welcome back. Joining us on the show now is Kunal Shah. He's VP Head of Commodities at Nirmal Bank. Kunal, thank you so much for joining in. And I want to talk about metals right now because we started October stronger, November started on a stronger note as well. But the kind of profit taking that we've seen in the last week or so has been quite intense. How are you looking at overall markets, one? How are you looking at the macros to begin with? Because this whole idea about that the US data will start coming in, the US dollar strengthening, the rate cut in December perhaps may not happen. How are you looking at all of these news events?
Okay, so yes, in a shorter term, you've seen some negative flows coming from China. The China data was disappointing. That was number one negative. So second thing which came negative for some of the big mine like Grasberg mine of Indonesia, they are restarting their production. So that was sentimentally negative. And the third most important point is that we have seen lately the Japan's 30-year bond yield shooting up, 10-year bond shooting up. And that has raised concerns about the prospects of whether the easy monetary policy will continue or not. But I believe there is no way out because the Federal Reserve has just ended its quantitative tightening program. So going forward, irrespective of the fact that in a shorter term, whatever challenges continue to remain, the fact is the liquidity conditions are going to get relaxed. The US M1, M2, M3 are near their all-time high, and they are talking about starting to print more money going forward. So in a shorter term, the credit market were tight in the US, and we've seen Federal Reserve infusing cash in the system, infusing liquidity into the system. Going forward, we believe some of the other sort of stimulus is underway, like we've seen $2,000 stimulus, which Mr. Trump said. So I believe that we are going to continue as far as macro is concerned. The liquidity is going to remain abundant, and there's going to be a relax. I have no doubt in my mind that they will not cut the interest rate. They have no choice but to cut the interest rate. Inflation, even if it is at 3%, they have to cut because they cannot service their debt at a higher interest rate cost. So the interest rate has to come down quite sharply going forward in the US and in other part of the Western central banks. So that all sums up to a fact that the macro is supportive for metals. Now coming to the micro, in micro, even though the production is starting for a lot of these metals, like in copper, Grasberg mine is starting. But the fact remains, China is likely to stick with the involution policy. And that means that the excess capacity in the metal sector on the smelting side is going to be weed off. So this remains the key reasons for us to remain bullish. And we continue to remain bullish because of these reasons. On the macro side, the environment will be supportive, and micro side, I think the excess capacity in China will be taken off. So I think the overall view, this dips, whatever you are witnessing right now, is an excellent opportunity.
To keep buying.
And maybe perhaps 1.5, 2 months down the line, you will see prices.
All right. Kunal, you've said this before as well, that 2026 perhaps could be a year of metals. When you say that and when you recounted all of these fundamentals, which perhaps would be supportive going forward, what metal would you be most bullish on and buy?
I'll be most bullish on copper for the very simple reason that the demand side, like the way we've seen in silver, the demand side of copper is getting brighter with the use of copper in the data centers, AI, everywhere. I mean, we are talking about big data centers coming up, so it's going to require a lot of power. And I think US, the way that data centers are growing, it will be very bullish for copper from the demand side. So US demand will grow by at least 5 to 6%. India's demand is expected to grow by 8 to 9% conservatively. So copper looks the most attractive. 10,000 US dollar copper, if you buy, I think by the end of next year, you will see copper at $12.5, $13,000 quite conservatively.
How about zinc? Because we've seen LME inventories decline quite sharply onto this one. Would you say that is the second one on your charts?
Yeah, so zinc too looks bullish because in zinc, the similar thing is happening. No new production of zinc is coming in last 3 to 4 years. A lot of smelters have cut down their capacity. So even though the China steel's production is going down or likely to go down, but the supply side of zinc is is shrinking, and hence we believe that we've already seen 15% run up in zinc prices in last 1.5, 2 months. But going forward, this rally can continue another 15 to 20% upside. I will not be surprised.
All right, Manisha, thanks very much for that. So that's on the entire commodity space. Well, we need to take a short break, but we're going to be talking to the management of Sequence Scientific Vyash Life Sciences on the other side on the NCLT clearing the merger of the two companies. Stay tuned.